guys, welcome back to the channel. Welcome back to another video. And in this video, guys, we're going to take a look at some examples of actual trades that somebody else took and trades that they lost, right? And so I'm going to break down these trades of why they lost these trades, and particularly essentially what goes on in your head when you're trying to do these trades. All right, so I'm going to show you some examples of some real trades, and we're going to break them down so hopefully you can continue to avoid getting into bad trades. All right, guys, so without further ado, let's get this started. All right, guys, so real quick before this video begins, I just wanted to give a huge shout out to the trader who allowed me to use his trading results as a teaching moment for all of you guys, so you guys can see examples of tendencies and things that you should not be doing when you're doing live trading. Okay, so huge shout out to him. I appreciate the fact that he let me use his trading results so I could share with you guys how to not trade, essentially. All right, and the thinking process really is what's more important on this. The thinking process of what a trader goes through, essentially, when he goes through these trades. So another thing is that the retail trader who took these trades, obviously they know what they did wrong, and I'll be more than happy to work with that trader to correct the behaviors if he wants to help. So thank you so much again for just allowing me to use your trading results, and guys, enjoy the video. All right, guys, welcome back. So let's go ahead and talk about this. So on the left, these are the trades essentially that were taken, right? So you can see pretty much all losing trades, right? So let's first talk about the euro pound, and let's break that down so we can go ahead and take a look and see how we can avoid getting into that particular euro pound trade. All right, so let's go ahead and break that down. I'm going to go ahead and start by putting in all of the different entries for the pound trades, and then we'll talk about it all. All right, guys. So this is essentially what the trade entries were to the stop loss. I don't know what the targets were. So I'm just going to assume the targets were 30 pips for this, for the sake of the video or whatnots. But so let's go ahead and take a look and play this out, and let's talk about essentially what's happening through each phase of these essential trade setups that this particular person was trying to do. All right, so let's play this out a little bit, and let's see what happens. All right, so when we talk about this particular first setup, right, is I can only assume two different things that they may be thinking about, right? Is number one, they're thinking about potentially this type of a setup here where you'd have basically an M first leg here, second leg going down. So that type of a setup. Second thing that comes to mind is essentially this as the M that they're looking to trade. Okay, now what are the things essentially that you would have that are going for you essentially in this trade setup versus the negative that's not going for you, right? So let's talk about those two differences here. So the first thing is what's good about it, right? So the first thing that I can obviously see that's good about it is that you potentially have one leg here, right? And then you have, let's say, another leg here, and even, let's say, a third leg right there, right? So you have that. Another thing that you have is you have the 800 EMA that's coming straight across price like this, right? So as you can see, the EMAs basically are acting as a type of resistance essentially when it comes to that, right? So those are the two major things that I see essentially that would potentially tell this trader, hey, we're looking for an M formation here, right? And so those are the two things. So now another thing obviously would be that that people would think, or that this trader essentially would think, that it's looking for a type 2 setup, right? Which is basically a type 2 setup is what? An M formation that happens at the top of the box, right? So that's what they would be looking for, is an M formation here, top of the box, type 2 setup. And again, so it's either they're thinking this or they're thinking that, right? So you have just the formation itself, and then you have the 800 EMA that's basically making this bounce off of it, okay? So those are two really good things to have, right, so far. As far as what this would look like right now, okay? Now as we play this along, what is it that we need essentially to get into this trade? Okay, what is, if you're thinking that is the second leg M, okay, fine, second leg M, we'll take it. What other things, what other factors essentially are you looking for you to be able to take the trade? Right, so for me, I'd be looking at, number one is the pattern, right? Is it creating what type of pattern is it creating? A type 1, 2, or 3, right? In this case, let's call it a type 2. Second is the timing. So what time is this happening at, right? So if you look, we're barely getting into the box, and this is an early box that I drew up, so it starts at 3, not 3:15. So technically, on the regular boxes for our indicators, this wouldn't even be in the box, right? So this is super early to begin with. So that's another thing. So I'd be looking for the timing. The timing for me is just not there because it's too early. It's 3 o'clock, right? We're just starting the session, right? We're just starting the session. Why are we immediately looking to get into a trade setup immediately once the trade session opens, right? So let's think about that. Then a third thing that I look for is for extra confirmation via a crossover of the 5 and 13, right? Now, if we look close here, where is the 5 and 13? All right, so here's the 5 and 13, and essentially you can see that the 5 and 13 are really separated right now from each other, right? It's nowhere near essentially closing, right, or crossing for them to be anywhere near an entry, right? If we're thinking that this is potentially an entry, I mean, by the time that these two cross over, you're literally looking at an entry pretty much almost past the middle of the range, right? Because by the time that this comes up and it starts to actually cross, you'll be somewhere around here, right? So let's play this out. And then here's the next candle. Boom. So that candle automatically took him out of the trade. Now, why did he get into the trade, or why did this person get into the trade? I don't know, because the things that were there were not strong enough for you to get into a trade. Okay? A lot of times when we're trading, we have this psychology aspect that most retail traders don't care about and don't pay attention to. Some of the most important videos that you should watch are about trading psychology. Not about the entries, not about the exits, not about the strategy, but the actual trading psychology. Those are the videos that you should actually pay attention to the most, because those are the videos that are going to help you. But in this particular case, in this particular example, I can only assume that particular trader was wanting to be into the market so bad that this is what they saw, right? They didn't wait for the extra confirmations that we normally would take, which is the timing aspect of it and the crossover that we want it to happen, right? The crossover gives us that extra confidence to know that we're in the right move, that we've picked the correct high of the day, right? Because at the end of the day, all we're doing, right, when you simplify everything, all we're doing is we're trying to trade off the high and off the low of the day. So if this right here is going to be your high of the day already, and we're not even started during the London session yet. So you're just starting the London session, and you're already saying that this is going to be the high of the day. Think about that. That makes no sense for you to automatically just think right away that this is going to be the high of the day when it's just 3 o'clock in the morning. Okay? So you get into the trade super early, right? Now, my other biggest pet peeve that I have with this is, okay, if you're going to get into this early, which you did, right? Which you got into this super early, which is fine. You want to get into a trade super early without waiting for extra confirmations? Cool, whatever, right? So you get into this particular trade super early. So he got into it at 84.062. And then what boggles the mind is, why would you have a stop loss that's 20 pips? A 20 pip stop loss. Look how high the stop loss is compared to where you think the high of the day is, or where you presume that the high of the day is, right? So if you're going to get into this trade super early, okay, so think about the logic behind this. If you're going to get into this trade super early because you believe essentially that this is the high of the day, well, if that's really the high of the day, guess what? They're not coming back, right? So if you're right, you're going to be right away, okay, and you're going to be in profit right away, right? Because they're not going to come back, right? You already have basically, let's say, one touch here, a second touch here, right? That's what you're thinking, presumably. So why a 20 pip stop loss? That's way high of a stop loss. Okay, if you're gonna do this and you're not gonna wait for the extra confirmations, then you need to understand that you need to be wrong right away rather than 20 pips later, right? So if you're gonna do this kind of trading, okay, and you're not gonna follow like all the rules or whatever, and you're gonna do this, then you need to basically limit your losses to, let's say, 6 pips. 7 pips, whatever the above, the high of what you think the high of the day is, right? Because if they've already gone up several times to it, right? So that high should be protected, right? So why are you risking 20 pips? Risk 6 pips. Okay, if you're wrong, you want to be wrong as soon as possible. You want to be out of the trade as soon as possible if you're wrong. Okay? And so that's literally the first entry. And then another thing is you can see that he puts in 2 trades at the same time. So 84.061, 84.062. So at the same time, you put in 2 trades. Why? Why are you putting in 2 trades? If you really wanted to trade a 0.4, just trade a 0.4. Trade a 0.04. It doesn't make sense for you to take 2 trades at exactly the same time. All you're doing is paying commission twice. You're paying the spread twice. You're paying double the money for the same thing. I never understand why traders do that. Okay? So if you're going to trade, if you're breaking the rules to begin with to get into the trade, right? So why would you risk more, essentially, when you're not waiting for all the confirmations to be there? That doesn't make any sense. If anything, you should be risking less because you're not waiting for the confirmations. So if you wanted to put in 2 trades, then put one at 0.01, okay, and then wait for the other confirmations to happen, right? The crossover, the inside of the box and stuff like that, and then you can put in another trade of a 0.03 or something, or 0.02 or something like that. But now you've gone ahead and lost 2 trades, both at 20 pips. Now you're negative, $10 off the bat, right? So let's continue on to the next step, right? So let's play this out so you can see what happens here. So now this particular second trade, which is this one right here, this 84.243, which is right here, and you can see from the timing of it, it's only about 10 minutes apart, right? So I'm going to assume that basically this candle is where they got in at. So I'm assuming that they got in on this particular candle here. Okay. Again, a 20 pip stop loss. Okay. At least this one, they got it right above the candle, right? But still, a 20 pip stop loss. Think about that. Another 20 pip stop loss. So you're thinking that this wasn't the high of the day. This is going to be the high of the day. Okay, now this is the high of the day, supposedly. Okay, well, if this failed on you and you took 2 trades on it, right? Wouldn't you want to have more confirmation before you go into the trade? Wouldn't you want more confirmation than this? Wouldn't you want to wait for the candle to close? Look at this. Let me replay back this candle so you can see what I'm talking about when this is how market makers get you to get into a trade. Watch how that candle works all the way down, and in literally the last minute or so, it pops all the way back up again. Look at this. So here comes the first candle, and then here comes the next candle. You see that? That's how they get you trapped, to feeling emotional to get you into a trade. Because they're showing you 2 solid bars, red bars, right? And so down here, that spread is probably pretty, open than normal. Right? So they get you to go into the trade, and as soon as you get into the trade, what happens? It goes against you. And what happens next? You're out of the trade again. So that's another trade lost, right? All right, guys, so let's go ahead and let's take a look at the GU trades, and we'll take a look at the buy ones here. So you can see here as we play this out, right? This is where he got into the trade, and essentially you can see what happened, right? Again, getting in too early, not waiting for the correct forms of confirmation, right? this is essentially the trade setup here with, you know, about a 15-16 pip loss, stop loss. But again, thinking that this is the first leg and coming for the second leg here. But guys, we don't have any kind of confirmation yet that this is going to be a viable trade. Okay, you always have to wait for the candle to close because you just don't know what's going to happen, right? And so essentially, look what happens the very next candle. He gets taken out immediately. Okay, so now we're in the box, and as this comes down and back up again here, essentially he gets trapped again on another entry, which was the 81, which is right about here. Again, first leg, and then he thinks that this is going to come back up and continue to go up, right? So if we back out here, so this trader sees this candle and is like, oh, we're going to go back up now. This is going to be the low of the day. We just spiked twice, right? The candle starts to go up, gets into the trade, and then of course gets taken right back out. And then he has one final attempt, which is the 32-133, which is actually around the same spot here of this candle. The main difference is that this is actually right here on this candle here. It's about an hour later, as you can see from the time here. So about an hour later, he gets put into another trade right here, and then again gets taken right back out, as you can see here. Okay, now I did speak to this trader after I made the first part of the video, just to get some clarity on what he was thinking. And essentially the sells that were put in here were after he just realized that the trend was going down, so he wanted to, you know, to go with the trend essentially, and started to basically sell. So that's where these two sells come in. But I wanted to highlight really the buys, because this is where it goes along with, you know, trying to trade with market makers, and essentially trying to use a strategy, right? So listen guys, I really wanted to make this video to show you guys essentially the mind of traders nowadays, right? Is we are so wanting to make money so bad that a lot of times we're willing to risk a lot more, and we don't even know it. Okay, we're willing to put in trades super early because we have a fear of missing out on trades. Okay, there's so many things out there, guys, again, with psychological effects that takes you through different stages. And if you haven't done any kind of videos, if you haven't watched any kind of videos or listened to any kind of audiobooks about psychology, guys, you need to do that. That's the one biggest thing that most traders never do, or don't think that it's important, but in reality it's probably one of the most important ones, subjects out there that you need to know about and you need to put your time into. Okay, because not following rules is one thing, but not following the rules because, you know, psychologically you're not prepared for what trading is a whole different story. Okay, so guys, I hope these examples help you essentially take a look into the minds of what a retail trader is thinking about when he goes into these trade setups. Now, I will tell you that the euro pound trades, so these euro pound trades, this is what I would share with you so you can be aware of why I would never have taken these pound trades. Number one is you just had a 400 so pip move happen because of the Brexit vote, or the elections vote that happened last week, right? So one of the things that basically happens when you have moves like this, guys, is that price is going to retrace all the way back. Okay, you're not going to get a 400, 500 pip move and price not come back up, okay, to correct that behavior. All right, so by doing this move here, this basically created peak formation low, and then basically you had level one and then going up from that. So because you're at level 1, you're never going to kind of try and trade against that. So essentially, this is why you would not have gotten any kind of good trades if you're going against that. Same thing with the pound USD trades. Essentially, this creates peak formation high, level 1, and then you're going down with the trend. So that's why trying to pick this back up is not going to work. It's going to kill you every time, because it's got to retrace back down. This was a huge move, guys. I mean, this was about 450 pips. Okay, so you don't get a move like that in the market in 1 hour, 1 candle, and then not see the effects of it the next week, which is basically coming back down to bring prices back down to reality. Okay, so guys, I hope this video helped you in seeing essentially the different things that happen within a trader's mind. And if you like these type of videos, let me know in the comments below, and I'll go ahead and continue to make these type of videos. But guys, thank you so much for your support. I really appreciate it, and have a good rest of your week of trading.